Ladies and gentlemen, welcome back to your favorite show on the entire internet, the Breaking Bitcoin Market Update. As always, with your host, Justin Wise, lead analyst at CrackingCryptocurrency.com. Hopefully you guys are having a fantastic day wherever you happen to be tuning in from today. Today is, of course, September 22nd, 2022, foul year of our Lord. Hopefully you guys are hanging in there as we grind deeper into the depths of the bear market. We've got a great show for you guys today. Unfortunately, we were unable to do yesterday's stream. We were doing a lot on the back end, but we're here to update you guys. Update. Yeah, that was the right word. Forgot how to speak English there for about 0.5 seconds. Update you guys on the FOMC decision, the way that it has moved the market's reaction from that decision thus far. And in my opinion, what this means for the broader economy and for the cryptocurrency markets moving forward. So we've got a lot today. We're going to laugh. We're going to cry. We're hopefully going to make some money. So as always, before we begin, we are very proud to host the fastest growing online community of active and interested cryptocurrency investors and traders. To stay up to date long after the show is over, make sure to join our free Discord at discord.crackingcryptocurrency.com. Link is always in the description. And if you'd like to support the show, there is no better way to do that than by lightly tapping that thumbs up button here on the YouTube player or giving us a subscription. If you are one of the really cool kids who are watching us on Twitch or DLive, a follow or a sub over there is always appreciated. Thank you guys for supporting us. And let's get on with the show. Okay. I do want to start off with the FOMC. Because I think that's pressing. We'll just do like a brief 30-second summary here. Ever since the decision of the FOMC, we did see downwards price pressure here from our favorite asset in the form of Bitcoin, dropping back down to the, what is this? Is this the green line of support that I drew the other day? And is this price bouncing off of it? Huh? Twice? It's like they watched the show. Okay, so, anyways, we got some nice upwards price pressure today. Altcoins moving to the upside. So overall, good day to be trading, good day to be long trading here. Again, I kind of said this earlier. One of the worst mistakes that you can make when we're in a crab market or we're in a ranging market is to be executing the same momentum-based trending strategies that we were using in a bull market or a bear market. Of course, we're in a bear market, but we're not really in a bear market per se from market structure for the past 3 or 4 months. There hasn't been a, let me use the right terms here. Yes, you could say that we're in a bear market. However, we're not in a dominant downwards trend, right? A dominant downwards trend is marked by a series of lower lows and lower highs, whereas an upwards trend is marked by a consistent pattern of higher highs and higher lows. And we haven't had that. We've been trading in a nice range in between the support level. And again, I showcased this on the stream the other day, where you can use VRVP in a range to determine essentially where in the range you should be filling up shorts and where in the range you should be filling up longs. So ranging markets are one of the few times when I advocate for the use of a reversal strategy because, again, one of the biggest mistakes I see newer traders making is attempting to apply the same trend-based system in a crab market or a ranging market, and often to their dismay. So, again, we're at the bottom of the range. You should assume that we are going to stay in the range and trade accordingly, and not plan on a breakout or a breakdown. You should never plan for a breakdown or breakout trade. You should react to a breakdown or breakout situation with a position. So if we do get confirmed opening closing below this level of support, we'll be looking at downside momentum to the $17,000 area, maybe even ultimately down to the $13,000 area. We've looked at our Glassnode valuation models multiple times. We have a convergence of the cost to produce one Bitcoin right now at about just a little bit below price in the low 18,000s. And Bitcoin's balanced price coming in around 17,200 as of my last check into it. And then, of course, we have our delta price, which is a hybrid on-chain technical indicator, as well as on-chain indicator, indicating that a fair valuation for Bitcoin's price might be closer to 13,000. Now, of course, I want you to ignore everything that's going on crypto Twitter and in the news lines and in the headlines. Obviously, Dan Morehead, Pantera Capital, is out there pumping altcoins like he's being paid to do it. He is being paid to do it, saying that the bull market's back. Crypto Twitter saying that we're going to 9K. Nobody knows. You just trade with the trend. You look at what the technicals are telling you. You look at the fundamentals and you trade accordingly. And the most important thing that I've learned in this, my third bear market. So this is the lesson that I've learned from the previous 2 bear markets. All you have to do is survive. Okay. Just survive. I guess there's 2 lessons. Just survive and don't be all in shitcoins, like low cap, like shitcoins, in the depths of a bear market, because those things are likely not going to go back to what they were worth. As new bull markets emerge, we always see newer projects kind of lead the charge. So you always kind of want to rebalance your portfolio every 2 years or so, because the likelihood that you're going to pick the project, and there's very few. I mean, if you go look at the top 10 right now, and you go look at the top 10 2 years ago, and then you go look at the top 10 2 years before that, they're completely different. Like, coins just stagnate, die out, developers go away, and new projects come in because new ideas. This is still a nascent industry. We're still figuring out the best way to decentralize money and to build a sound money system. And the profits that come with that are going to be accrued to those who adjust their portfolio accordingly. So do not be holding all-in shitcoins. We're going to be talking about this because I sat today through a Galaxy Digital. If you don't know, Galaxy Digital is a very large, very prominent professional trading desk, cryptocurrency advisory fund. They do all kinds of things. But anyways, I was invited to and sat through one of their webinars today. And one of the things that struck me the most is their head of their kind of flagship trading strategy called Liquid Alpha, Chris Denira, I believe his name was. He was talking about how they approached and how they traded out of the Ethereum merge. And they did treat it as a sell the news event. So about in August, they rotated a lot of their Ethereum into Bitcoin. And that's very telling. They expect more downside price pressure. They expect lower prices long term. And they expect Bitcoin to outperform Ethereum moving forward. So I think that's very important. So what should you take away from that? One, in a bear market, you should be, and this is like the lesson that you'd learn from a financial advisor. When times are tough, you want to be more in bonds than in stocks, right? And the same in cryptocurrency. In cryptocurrency, you want to be more in stable coins when prices are going down, more in a downwards trend, especially right now. And less, and besides stable coins, you want to be holding Bitcoin predominantly, because that is going to, even though it's going to drop 70%, the other altcoins are going to drop 90 to 95. So you want to be holding something that is the most stable, the most reliable, the most liquid to trade in and out of in case you have a financial crisis and you need to obtain your funds. Good luck trying to sell those NFTs to get your money out in the depths of bear market, but you can easily sell Bitcoin even at low prices. So anyways, moving on from that, let's start off with a little bit of humor based on all that. This is a really good tweet. Bitcoin maximalists hodling through the 2020s. I just think this is great. You know, obviously we've got this gal.
I'm super excited. It was
you know,
really
she's
tough.
really
It was fun. I enjoyed
she's really
it.
beat up.
It was
and
definitely
you know, this
a
is what it can
ball
feel
game,
like,
but
right?
I
At the end of a
had
bear
a
market,
blast,
right?
so
When you just feel completely giga-wrecked and times are bad. But again, just hold on and you survive. And, you know, I bet after a month of recovery, she was looking quite beautiful. So, okay. So let's get into, let's talk about the FOMC meeting. For those of you who don't know, the FOMC meeting was a big announcement brought on by this gentleman right here. Yes, I am a definite noob streamer, Kumasabi. I love you, brother. So Jerome Powell, Big Papa Powell. We had a big FOMC meeting on Wednesday at 2 p.m. Eastern. And I've got my notes here. So I do also want to thank Macro Alf on Twitter. He did help compile a lot of these thoughts as well as to a few other researchers who helped me out with this process. So, okay, quote, "Trust me, our tightening will be enough to bring inflation down to 2%. It will be enough." This is a quote from Jerome Powell as he concluded the FOMC speech. This is how he closed the press conference. And here's the thing. I don't know how well you guys pay attention to macroeconomics, but this is almost identical to what Mario Draghi of the ECB said last year. That they are committed to they are committed to their financial measures, and that their measures will be enough. Okay, how did that play out for Europe? Here we are about a year later, and they have completely reversed course and given themselves essentially the unlimited amount. Or the unlimited right to print as much money as they want in the form of these kind of sovereign bond buybacks. So very not committal. But okay, so what did they commit to? Obviously, we had a 75 basis point rate hike, so that's 0.75 to the federal funds rate. I did lose $1 because I was really expecting them to go 100 basis points. So I did lose my friendly bet with my friend. That's okay. I have his private keys. All right, moving on. So this really strong commitment to taming inflation, as I've said, is the Federal Reserve's primary motivation right now. They do not care about jobs. They do not care about the contagion over in China. They do not care about what's going on in Europe, even though they should. They are committed to taming inflation. Now, again, if we can take any lessons from how the ECB kind of reversed course on everything, we can see that in the long run, no matter how hawkish they may stand, they're going to be subject to changing their positions. And again, anybody can change their mind in the future. But what I will say in their credit is that thus far, the Fed has been remarkably consistent in their approach. Unlike lots of other central banks around the world, for example, the Chinese central bank is facing extreme contagion due to the credit problem over there. Obviously, the Japanese yen has tanked, 50% very recently. So they have come out and publicly admitted that they are completely unable to battle their financial issues. And of course, we know what's going on in Europe, mostly due to the Russia-Ukraine war and the energy crisis that's going on in Europe right now. So a lot of terrible things going on in the world right now. And honestly, a lot of just mismanaging of the centralized fiat system, because these are the problems that you get when you have a very lethargic, very old, very corruptible system. And you're using old school rules, old school ways, and you haven't adapted. You're going to be subject to system shock. The system works until it's shocked, and then, it doesn't do so well. So anyways, so let's look at the dot plot. The dot plot is something put out by the Federal Reserve Bank, and this shows what their expectations are, what they expect the federal funds rate or the inflation rate to be, not the inflation rate, but the federal funds rate, the federal interest rate, what they expect it to be. And what's extremely noticeable here is that 12 out of the 19 participants in the FOMC predict that the federal funds rate will be between 4.5% and 5% by December of 2023. 4.5% to 5% by December of 2023. The implications of that are really staggering. What that really signals is that risk on assets are likely not going to just if you were to just go off this data, it would say that it's very unlikely that risk on assets go back into a bull market until those interest rates start going down. This is kind of the traditional way to view this relationship between risk on assets and the availability of credit. When interest rates are high and the flow of credit is low, it does not incentivize. It incentivizes spending money because your funds are being eaten up by inflation. However, in these times when we also have stagnant economic output, that's the biggest risk. A stagnant economic output means that we're not really being able to grow the wage base, that we're not really being able to deploy this new capital into new investments in technology, that we're really using it to just sustain what we have. It's in periods of growth when there's lots of excess capital that can go into things like R&D, development, buying that new house, finishing the addition to your existing house, buying the new car, learning a new skill, going to college. All of these things happen when money is very free-flowing and very revolving, and you have all this excess capital. The excess capital tends to get dumped into the stock market and risk on assets, and that's what kicks off the fuel for a bull market. But when we have the other situation and the federal fund rate is quite high and it is expensive to take loans, people just hunker down, put the money in under mattress, and they don't do much with it. So that is the situation that we're in. We have stagnant economic output. All of the forecasts for economic output moving forward look like we are going to be not recovering anytime soon. In fact, what the projections are showing is that economic output is going to continue to slow down while inflation rises. And this is kind of the horrible situation known as stagflation, the combination of rising costs and lower pay, right? Stuff's more expensive and you're getting paid less money. This is the horror scenario. And as always, the lowest earners in the middle class get hit the absolute hardest because they don't have the biggest safety net. Now, how confident is the market in the Fed's proclamations and ideas of where we're going to go here? Well, let's see, because there's a metric for that too. This is the implied federal funds target rate. And as you can see, the orange line is what the FOMC members, this is based off the FOMC members dot plot that we just looked at. Whereas the blue line is the OIS. This is essentially the market signaling to what they think in reality is going to happen. And as you can see here, there's a complete disparage here. There's a complete, not disparage. There's a complete English difference of opinion, where we can see that the orange line is rising into December 2023. All of these are year-end years. So this is December, this is December, this is December. So the federal funds rate is implied by the FOMC to be rising into December of 2023 2023, whereas the market expects that by December of 2023, we're actually going to be seeing interest rates declining. The market feels that the Fed is going to be unable to maintain their hawkish stance and that they will be forced to lower the federal funds rate in response to stagnant economic output, which will create a larger crisis in the labor market. Inflation be damned, essentially. Inflation not be damned, but inflation will likely be coming down by then. I do feel that peak inflation is behind us. Again, I do feel very strongly about that based on all the data that I've seen. So I do feel that peak inflation is behind us, but that doesn't mean that inflation is going to go down dramatically, as we'll see a little bit later on here. So, yes. So again, the OIS does. The OIS does mark in a terminal rate, i.e., the rate moving into December 2022 at 4.6%. So the market is expecting an increase in the federal funds rate moving into the end of this year, but they do expect that by the end of the following year that we will actually be seeing a decline in the federal funds rate, which might actually be fuel to the fire that a lot of people are saying that we're going to be kind of selling off or in a bear market moving into the end of 2022, maybe Q1 of 2023. But then by time spring rolls around 2023 and spring earnings come out, risk on assets will begin to perform very well, and the Fed will be not pivoting, but pausing in their very aggressive tightening aspects. So definitely not out of the question, and in fact, probably more likely. Now, Jerome Powell in his speech made a lot of references to the Volcker 1970s inflation type situation, right? And he kept saying over and over again that when the Federal Reserve at that time period really paused their tightening efforts too soon, it had a negative impact on the economy. So here is core inflation. Core inflation is the cost of goods and services, gasoline, electricity, home prices, rent, things of that nature, consumables, things that are considered vital for survival, right? And honestly, based on statistics, the things that the lowest earning bracket and the things that the middle class spend the majority of their income on. As we can see from this chart, look at this graph. It's not a straight line. Regardless of measures taken by the Federal Reserve, they do not have, it's like, when the Ethereum merge was going underway, it was compared to attempting to change the engine on a 747 as it was in the air mid-flight. And, battling inflation or making adjustments to the economy and monetary policy at any point in time, given all the moving parts, is very similar to that. So we have to be very realistic about what the tools are available to the Federal Reserve Bank or any central bank, and what the effects of those have. They essentially can pull strings, and they get slow and subtle effects over periods of time. It's not like they just open up a floodgate, and unless they're printing money, which seem to make the market go immediately straight up. But anyways, yeah. So with all the efforts of the Federal Reserve at this period in time, this Volcker period, inflation does not go directly up or go directly down, just like a good healthy chart, right? There's higher highs and higher lows, and an uptrend and lower lows and lower highs, and a downtrend with lots of variation in between. So we see these effects slowly over time, and this is very important to understand. But what I mean to say by that is that regardless of what the Fed has done right now with their current monetary policy, for you, the people watching this, particularly United States citizens who are concerned about the cost of your house, who are concerned about the cost of your rent, the cost of gas or electricity, food, consumables, things like that. Those things are not going to get cheaper anytime soon, regardless of what happens. Okay, regardless of what happens. This is the current reality. This is the new normal for a while. We're going to experience, and the reality is, like, how often do you see prices go down? When I was a kid, gasoline was underneath $1. Okay. And not much, but like, a little bit underneath $1. And, and I remember in my late teens, early 20s, when my father was absolutely flabbergasted, like how dads are, like probably just like I am. Now, the gasoline was over $2. Okay, that was crazy. And they kept saying, well, it'll go down when so-and-so goes away. It never goes down. Prices just go up. This is the nature of inflationary currency. Prices must rise to meet an ever-expanding base of money. So, but prices can move up relatively high compared to the average. So right now we're seeing a big deviation away from average growth, and we will be able over time, ideally, to bring that back down and continue experiencing that average growth and rise in prices. But you are delusional if you think that we're ever going to go down to gasoline below $2, for example, right? So get that out of your head. What do we got here next? Now here's the thing. Jerome Powell referred to this as essentials, essentially core CPI. So right here, utility costs, gasoline, food at home, electricity. Look at the CPI year over year for this, right? We do see a big spike. Obviously, the 1970s saw a huge wash of inflation. This is the Volcker years when very strict measures were taken by the Federal Reserve Bank. And things, pretty much cool off. We can see that things got really cheap for essentials from the period between, I would say, 2010 to 2020 here. And no big surprise there. We recovered from the well, we didn't really recover. We just covered it up and then kept pumping. Around 2010, 2012, the housing market began recovering in about 2015, 2016 from the effects of the 2008 financial crisis, as far as in nominal terms. And things were all pretty quiet on the home front. Definitely not the massive rise of inflation that we saw in our essentials back in the 70s. But if we look in 2022, we can see that this thing just looks like the chart of the latest Shiba Inu token, right? This thing is just straight up only. And again, we can see that even during the worst of times, things do go up and down. But again, I just, and I don't want to scare people or piss people off, but I just want you to be realistic, right? The cost of your essentials, food, fuel, gasoline, utilities, electricity, all of these things that you're going to require to survive, they're not getting cheaper anytime soon. So everybody needs to take a hard look at their budget and make the responsible financial decisions that is going to allow them to weather this storm with a modicum amount of comfort. Again, crazy things can happen, and no matter how comfortable you feel, like one bad decision can knock you out. So, I'm a big advocate of just common sense, best practices for personal finance. Make sure you have a safety net. Make sure you're putting money away into your 401k or your long-term investments. Make sure that you are regularly contributing to something that is going to improve the life of your children, either a 529 or a 401k for that, whatever. You've got a lot of options out there, okay? Not a 401k for your kids, but damn it, I'm going to require that from my next employer. Do you guys offer a 401k for my kids as well? I'm going to need you to match that 5%, please. Okay, or else I'm going to the competitor. Now, so, like at the end of the day, Jerome Powell didn't really say anything new. He didn't really iterate anything different than what he said at Jackson Hole. He just really doubled down on it and reinforced what he was saying. So I think that people who are thinking that inflation is transitory or that things are going to get better immediately or whatever, like it's just not based on the data. It's not going to happen. Right. So any users, okay. So what does that mean for crypto? What does that mean for crypto? Well, as far as the stock market goes, just based on everything that we went over and just based on the Fed's current policy, at this moment in time, for long-term investments, I would not consider long-term holds the most profitable strategy right now, or to have the greatest likelihood of success. And this is why I've been extremely consistent in my opinions about Bitcoin being an extremely high-risk asset. But for the holders out there, personally, I have allocated 25% of my stable coins back into Bitcoin at these prices. And that is the total amount of Bitcoin that I desire to hold for the next bull run. I've made I've made a smaller allocation to Ethereum. But the reality is, moving into the next bull market, likely my allocation for Ethereum in my portfolio, this is not my cold storage account or savings, is going to be larger than Bitcoin. I've made that mistake the last two cycles, and we're going to take a little bit more risk this time. You know what I'm saying, boys? But yeah, I mean, the story's pretty simple, right? If risk assets move up, then what the Fed is attempting to accomplish with their tightening monetary policy is going to be less effective, and the Fed doesn't like that. So, yeah, and actually, in Macro Alf's tweet here, he has a really good, kind of summary here, which I'm actually going to bring up on the screen. And he says right here, even if we assume that earnings aren't downgraded, or assuming wider risk premia, risk assets don't seem a very good risk reward long here. Best case is that the S&P 500 will retest 2022 lows. Okay, now, this is just one analyst. He could be completely wrong, but again, this makes a lot of sense based on the data that we have available to us. Okay. So let me know your guys' thoughts on that. Let me scroll through the chat here real quick, and we're going to get into today's technical analysis. Shout outs to Kimo Zabi, Tom Hardy, Swing Trade Pros. We've got Ron Legato, Aaron Webb, Brian B, Alex81SG, Cisco Kid. Good to see you, my friend. Let's see here. Have I charted Bitcoin versus the S&P? I mean, correlation right now is extremely high. Yes. Alex81 talking about random people at Walmart talking about inflation. We peak boys. Yeah, I do feel that peak inflation is behind us. Yes. BTC not one today, not one tomorrow. Yeah, that's funny. I don't. Okay, we've got a lot going on today in the markets. It's a pretty nice day. We are pumping off of support. Bitcoin up about 5%. For the day, we've pulled back to about 4.27% as the crow flies right at this moment. Let's get rid of that. Not the baseline. Sorry. Let's get rid of the 200 period, and we'll just kind of zoom in. So again, overall range trading methodology here, ladies and gentlemen. We've got some pretty clear support. Again, you can just look here at the volume profile of this current range. All right, and this lets you know where you should be getting short and where you should be getting long. I'm going to be very, very clear about this. Macro, I am expecting lower prices. That does seem to be the most likely to me. So here's the thing. If we start pumping up to here, I am going to be filling shorts. And I am going to wait for a confirmed breakout before I flip long. So I'm just letting you guys know that now, right? I'm going to be consistent about this, right? We're long here. We're short here. We're long here, we're short here, okay? And we're going to keep doing that until the range breaks, okay? So we are at the lower end of the spectrum right now. The risk reward is to the long side right now. All right, what do we need to see to invalidate that? We need to see an open and close below our current low or below this current green level of support. Again, you can use the volume profile. You can use candle body closes on the daily time frame. It's really whatever you're comfortable with. Lines, zones are not perfect levels. You'll never, almost never ever, see a perfect respect of that level. If you really want to know the price at which things will turn around, you really have to read the tape, watch market order flow, and it's going to be different on whatever exchange you're on, and different on the liquidity that happens and the liquidations that happen and the market orders that open up at that point in time. So that's why when we talk about these areas, we talk about zones. These are levels, general levels in which we should watch for specific reactions that, if you have the correct trade thesis or have the right strategy, tend to be profitable. Now, we are pumping up right to the current point of control of the range. The most volume by price has been traded right here on this red line, about 19,700, mid 700s, 19,700, 767, something like that. That makes this a current level of resistance since we're below it. Okay, so we can start to get excited. Well, again, not to get excited. Again, the risk to reward is to be long. We're in the lower end of the distribution right now. So i.e. the biggest risk to reward is if you were able to scoop up positions right now, anywhere between here and here. I would be using these levels as take profit areas. So I would be scaling out at 19,767. I would be scaling out at 21,451. We have a convergence of volume and the 55 EMA and the baseline right there. And then finally, I would be scaling, almost all of my position out at the 100 EMA here on the daily time frame, and then I would be leaving the last portion of my trade to run with the trailing take profit, or just to hold in general. However you guys want to do that. I use 3 smart trade for most of my trades. So the trailing take profit feature is quite nice, and you can just set a wide like TTP like 5%. And then you can capture a nice move to the upside. Then if we do break to the upside here, the idea is to catch the big move, the initial breakout with a breakout position, a momentum breakout position. And then we'll reevaluate when we see the pullback happen. Well, we see the breakout, a pullback, and then we'll reevaluate to the upside. But again, I am not expecting us to enter into a bull market here. I am expecting us to test lower before we do move up. So yeah, okay, down to the 4-hour time frame. Yeah, nice double bottom here on the 4-hour time frame. A lot of volatility here on these 2 candles. Big fake out to the up, fake out to the down. Liquidity grabbed, shorts grabbed liquidity, longs grabbed liquidity, and then like here we go. Here we go to the upside here. Yeah, resistance on the 4-hour time frame up here about 19,560. Overall, we're just in a very hot spot right here. But again, you zoom out to the daily, risk reward ratio here is to the upside. Now, let's look on boom. Let's go over to Coinalyze and take a gander at a few things. So let's give the page a refresh, as we are wont to do. You know what? Okay, and what do we see here? Well, so here's that fake out right there. But ever since we bottomed here, we did see a steady increase in rising interest, open interest. Nice, beautiful uptrend here from open interest as the market moves up. New fuel is coming in, continuing to grow that. And this is honestly one of the greatest patterns to trade. When you just see a nice, healthy uptrend, prices moving up. That's all you need to see. You just need to see price moving up in a nice, orderly fashion, and nice rising open interest moving up in an orderly fashion. Beautiful pattern. Get in on pullbacks, get in on breakouts of previous highs. Lots of ways to trade or get your entries. But unfortunately, we start to see a really consistent drop off in open interest right here. So far, we're not really seeing that additional fuel come in to continue pushing prices up. Now, if we do go to the 30-minute, we can see this a little bit easier. Here's that downtrend, and here's that nice rising open interest. And on this slightly higher time frame, you can see that we are still at a significantly more elevated area of open interest. Open interest is right now almost 6% greater than its highs. So just on ByBit, we have seen an increase of $250,000 in open interest just since the bottom. Not the greatest amount of money, but not too bad. Sorry, that is yeah. Okay, anyways, the positive thing too to see is that cumulative volume delta has been rising throughout this area. So buyers have been in control. We have seen significantly more buying than selling, which is good to see. You can see price rising and CVD falling down, indicating that sellers are really stocking up short positions, and regardless of whether the price is moving up or down. We did just get a nice series of long liquidations right here. And funding has just flipped negative, indicating that there is a lot of presence or a lot of interest in attempting to short this. Again, this does kind of set the scene for a short squeeze, but shorts aren't really in control here. Buyers are in control here. So yeah, just looking at this on the zoomed out time frame, we need to watch open interest. We need to see open interest begin to rise back up to provide new fuel to this fire. But so far, looking at CVD, this overall looks relatively good and healthy. We could expect a mild pullback here, but again, if you do see a mild pullback here, I would be angling for entries. I would not be angling for shorts, just based on what we're seeing from the daily time frame. Okay, covered a lot there. Any questions about that? Let's see here. Randall McMurphy, what's going to happen after 3 more halvings? I mean, the supply is going to get cut 3 more times. Mr. T, welcome to the stream, man. I haven't seen you in a while, brother. He says, I think we're seeing institutional dollars shorting, suppressing Bitcoin and Ethereum through cash settled futures. BNB, on the other hand, is outperforming both no cash settled futures, at least not on the CME. So one of the biggest things, not one of the biggest things, but one of the things that I follow. Oh, sorry. Let me adjust my screen here. One of the things that I followed a lot and that I've talked about in the past is the CEO or the head of product at CME, when they launched Bitcoin futures in December of 2020 or December of 2017, he said, "We will tame the Bitcoin markets." And what happened following December 2017? The markets collapsed and we entered into an absolute bear market. So he was right. So the idea of using cash settled futures to suppress the price of assets is a common theme in the precious metals community. So it is a very common, I don't want to say conspiracy theory, but it is a widely held belief that cash settled futures markets are used to suppress the spot prices of gold and silver, specifically silver, but gold too. So I do not disagree with you. I do not disagree with you. We do have to understand that fundamentally, in addition to being a risk on asset and something to invest in, cryptocurrency, particularly Bitcoin and even Ethereum, is an attempt to build an ultrasound money to compete with the fiat currency of a nation state. Historically, nation states do not look kindly upon those who challenge their sovereignty or their power. And again, it's just common. Anybody who gets a position of power will really do anything in their power to preserve it, because, it's just like if you live in if you get to the point where you're living in a 3,000 square foot house, downgrading to a 1,500 square foot house, we're very comfortable with our current level of comfort. You know what I mean? We're fine, with the hard times, but, the hard times in our bathrobes. And like those kind of hard times. Yeah, those. So I do not disagree with you there, brother. Crypto Bull in the chat, Zan. Shout out to Manish Atwal, Mr. Ether, Robert Warner. What's going on, brother? Good to see you back, and good viewership today. So thank you guys for coming into the stream. Yeah, let's just keep it rolling here. We're gonna take let's do a quick pause. We'll do a quick shout out to our official partner of ByBit.com, official exchange of CrackingCryptocurrency.com. You guys go get your free $50 if you so desire. Let's take a brief pause, run an ad, and we'll be right back. And when we get back, we're going to get right into Ethereum. Can't catch a break over on BitMEX with all the wicks? Try a better alternative at bybit.crackingcryptocurrency.com and rest easy for a change. Absolutely love it. Gets me every time. And moving on to Ethereum. Okay, obviously, Ethereum post-merge has had a more significant sell-off than Bitcoin. We have seen a complete sell the news event, reacting positively now today, coming off of the same kind of bullish pump that the rest of the market is experiencing. We did crash down below this current level of support with kind of a exceeding momentum and volatility. Look at the way that our moving averages are diverging or moving apart, very indicative of a strong trend. And of course, we've had a complete breakdown of our moving averages out of kind of the crab structure down into these new lows. Now, commonly what we'll see in this area is something like in a crab market is something called a spring, which is where you will break down below excuse me, where you'll break down below your lowest low and kind of grab all liquidity in those areas before moving to the upside. But overall, even with Ethereum sell-off, we can see that we are still holding up from a relative performance value better than Bitcoin. All right, as far as market structure. So we have our current low consolidation zone for Ethereum right over here. And where the current plunge has taken us and where we did see a reversal is right at the resistance level, turn support of that previous consolidation zone where we saw a lot of accumulation, indicated here by the volume profile. So the point of control right now, the area where the most volume by price was traded, was here at these areas. And this is likely individuals selling on the rebound from the recovery, okay? Whereas they were accumulating long positions here. Anyway, so Ethereum had this really nice pump up leading into the merge. This is mid-August, exactly when Galaxy Digital said they were moving out of their positions when they were converting their Ethereum into Bitcoin, curiously enough. And we've had a new market structure, a micro market structure inside the macro bear market of a micro bear inside a macro bear. So lower lows, higher low, and now a lower low. All right. So where does that leave us right now? Upside resistance in the form of removing averages. So essentially what we have now on the way up overall, I'm still treating this as a consolidation crab zone, just like I would treat Bitcoin. So as we move down into the lower end of this range, we want to be accumulating long positions. And as we move to the upper end of this distribution range, we want to be accumulating short positions and closing out our longs. You could be really complicated and not close out the longs and add to shorts, add to longs, add to shorts, add to longs, add to shorts. And a lot of professional trading desks will trade this way. It's called opening up multiple legs of the same position. And then when you actually break out of the range to the upside or the downside and you have it confirmed, over time, you slowly close out the losing leg of the position. Optional to add those funds into the winning leg of the position, but that depends on a variety of analytical factors, including fundamental and on-chain when it comes to cryptocurrency. And my dog is around. My dog's doing the thing. Kimozabi, very good observation here. He says, Ethereum tends to not take lower liquidity until way later. I.e., he's talking about taking lower liquidity. In this example, there's multiple ways you can look at it, but if this is the low, then we know that there's a lot of liquidity right here because anybody who buys this zone might be setting stop losses here. So there's going to be a lot of liquidity. Also, we know there's a lot of liquidity there because anybody who's long in this area, if they see price break down below the low, very common for people to then close their position manually as well. So either way, you're going to have a lot of market flow if price breaks down below here. And a very common thing that market makers will do or that savvy traders will do is attempt to push price down to those zones and use the market order flow from closing positions or liquidations to fill their long or resting limit orders and then take price up. So this is just the way it works, ladies and gentlemen. Don't hate the player, hate the game. And what Kimozabi is saying is that he's noticed that Ethereum does not tend to do that until later on in the cycle, whereas Bitcoin prefers not to take upside liquidity. And I think maybe the comparison there would be that Ethereum does take upside liquidity and that Bitcoin does take down lower liquidity. So very interesting. Cool observation, man. I like that. Okay, so if we're filling up limit orders right here, if we're accumulating long positions in this range, then we want to be looking at where potential take profit targets are for the upside. Again, we've got this first level of we would hope support, potentially term resistance at about 1445. Our baseline and the not the second point of control, that's not a thing, but the second area of highest volume by price, which just happens to be where our baseline is, a little under 1600, about 1590, pardon me. And then up here at about 1738 would be the third TP. And then again, you can leave the rest to run and to see what happens up here at the upper distribution, whether we run or we reach resistance at one or two of those areas. But again, volume profile, insanely helpful tool for determining TPs. All right, moving on, looking at exchange metrics for Ethereum. We are looking at the Ethereum USDT perpetual on ByBit. So 30-minute time frame here, so we can see a greater picture. We do see something very similar to Bitcoin here. Here's this latest sell-off and a collapse of open interest. Let's see here. Yeah, a drop of 11% in open interest. Very significant. 11% of all market participants fled the market here. And since then, we've seen a rise. So from the lows, we saw a rise of 11%. We saw that open interest come back. And right now, we've seen an increase of about 8% open interest. So open interest is still in a downtrend, unfortunately. We're still making lower highs and lower lows. This is not bullish. This is not good. So potentially with Ethereum anyways, we do have a lower to go. Although open interest has been exiting the market, CVD has been on the rise, indicating that throughout this area, buyers have been more active accumulating long positions. That's fine. But again, unfortunately, the open interest is just not there. And that's typically what you will see in a downtrend in price. That's totally fine. Nothing to get super concerned about because price is trending down. Open interest usually trends down. Falling open interest is almost always bearish. So Ethereum might be suggesting that this is not the bottom area for Ethereum, that we actually are going to be trading down a little bit lower in price before we get the bottom of the range, potentially move back up or potentially break down. So good to see, but nice for the longs out there to know that you're not potentially on the wrong side of the trade by yourself. because buyers have been very active throughout this area, accumulating lots of long positions. Again, the shorts got very aggressive here down here at the market bottom. You can see this absolute increase in the funding rate, indicating the shorts are getting very aggressive, and that's usually a sign of the bottom. So funding has flipped moderately positive while CVD is on the rise. I would still be accumulating, as I am, long positions as we kind of now enter that lower end of the distribution for Ethereum, then be looking to target these areas on the upside. Very simple, very easy. Let's get the screen back here. And now we'll pause for a little bit more. Oh, why did I not change this? I always forget. We did do Ethereum just now. Okay, now we're going to move on to Big. You know, there's nothing new under the sun, you know. NFT flipper's going to NFT flip, you know what I'm saying? All right, I'm gonna hate you both. Thank you, man. Shout out to B-Flow in the chat. Kemozabi adding to his previous thought here that look at previous macro lows on Ethereum. I know this because I usually wait for this spring and don't get positioned properly. Yeah, so do you see that same thing with Bitcoin? Do you find you have more success when targeting the spring for limit entries with Bitcoin? That would be yeah. Please post some charts in Discord because I'd like to see with a little bit more detail what you're talking about. So, all right. So let's visit. We've got a little bit left in the show. So let's visit Glassnode and look at our valuation models just so we keep that fresh in our heads. Miss Scoozy. Okie dokie. That's very weird. There we go. All right, so this is our valuation models for Bitcoin, where we are predicting our downside price targets. And just an update, we are trading below our realized price. We are trading above our balanced price at $16,761. That is our next downside target if we break support. And then right now, our delta price, which is our last downside target, unless we see additional data, is sitting at 13,266. So if you're wondering where to set your limit orders or your stank bid orders, as we typically call them, there you be. And just to look with a little bit more detail, at that balanced price, we see a convergence of the balanced price here. We saw a beautiful convergence here. And the difficulty regression model, which is an attempt to calculate on average how much it costs, including electricity, to create a Bitcoin. Right now, about $18,039. So as we fall below there, we will see a situation called minor capitulation. And minor capitulation leading into minor recovery has been one of the best bottoming signals of previous bear cycles. So definitely something to pay attention to. And here we can just see a beautiful green day in the markets. Congratulations to the token holders. XRP. Beautiful. Algo, one of my larger positions right now. Beautiful. Okay. So far, we've gone over all these metrics before: exchange flow multiples, inflows and outflows, realized profit and loss, coin dormancy. These are all metrics that I track to determine whether the bear market is really over. And so far, none of these metrics have really begun ticking back up in a significant way. So unfortunately, yeah, still the bear. All right, average funding rate has actually flipped bearish. If we average across all exchanges, open interest across all exchanges is on the decline. The leverage ratio actually declined, but is now on the rise, indicating traders from the 12th of September to the 14th of September really de-risked, but now their risk is back on the rise. Our annualized rolling basis for BTC is not 0.178%, so definitely no significant profits in buying spot shorting futures, which is a strategy that we employ whenever that metric is above 2%. Yeah, nothing else supremely important here. Volume is up over the last 3 days on all exchanges, as is open interest. So not bad. Whereas the balance, BTC balance on exchanges does continue to decline. Okay, let's look at altcoins of interest. This is where I go every single day to spot the most profitable altcoin opportunities. And the most profitable altcoin opportunities today are going to be Reserve Rights, Algorand, XRP, ASTR, I don't even know what that is, Arweave, Compound, and I'm going to stop there. Really down to Arweave. I really only look at the big ones, the ones that have had really like significant above 65%. So actually I'd limit it to these top four. So go chart these out. Look at the open interest and buy sell volume over there on Coinalyze. Use the technical analysis indicators that we provide to you in TradingView and identify your entries and exits as well as your directional bias. But these are going to be the ones that are likely going to move the most over the next 24 hours due to that big increase in open interest. So again, Reserve Rights, Algorand, Ripple, XRP, and ASTR. What is, I don't even know what this is. Astar. Astar. Nice movements. I like it. All right, and we're going to conclude by looking to Santiment for more long-term potential opportunities here. So on Santiment, I track on-chain activity, and these are our strong and oversold coins. So what we're looking for here is price action, not price action, but MVRV ratios that put these coins in oversold territory. And MVRV is highly superior to a momentum oscillator for determining the oversold value of a coin. It's market value to realized value ratio. Ethereum having a very negative MVRV ratio right here. Hex has had a consistently low MVRV ratio, and again, is beginning to look very attractive. Bone Shiba Swap is on the rise, and I just want to point this out. I did, I don't know why it's not showing the chart right here, but I took a... Here we go. Yeah. So I've taken I took a position in Bone Shiba Swap. This is one of the findings from our senior analyst, Alexander Pearson. And yeah, Astar, Jushui. Yeah, so this is up about 12% so far. Decentralized holding, this is on Shiba Swap. Shiba Inu has also been consistently strong and oversold. We're starting to see a lot of chatter and activity over there with both Shiba and Doge. So potentially opportunities there for positional trades on those as well. I've already released this information to the premium members. But Ethereum, Hex, Synthetics on Optimism, Curve DAO Token, Gala, BitGert, Veracity, and Bone Shiba Swap seem to be the showcasing the greatest opportunities here for positional or swing trades from a strong and oversold position. And the strong comes from analyzing on-chain activity. So we are looking for significant spikes in all the metrics that I think are viable: daily active addresses, on-chain volume, and exchange volume. These are coins that I typically avoid buying into, and sometimes you'll just see WBTC, and this gives me an insight into what's going on chain and what the next trend or narrative might be in cryptocurrency. This is exchange inflow anomalies. These are the coins that have seen a 300% increase in their inflow to exchanges, and typically that's quite bearish. But Wrapped Bitcoin has seen a massive increase in inflows to exchanges, so very interesting. Not sure what's going on there. MXC, SSV, New Cipher, API3, Didex, Nest Protocol, Hi-Fi Finance, which used to be Mainframe, and Unify Protocol DAO. So if you're holding these coins, probably a good idea to review the charts and potentially look to take some profits, as lots of other people seem to be heading for the door. And then I look at my screener, which just shows the most kind of active coins over the last 24 hours. So I'm looking for big increases in daily active addresses, exchange volume, and on-chain volume. And so what's interesting about the screener is that it's not always buys or sells. You do have to look at the chart. It just shows me that there's opportunity here. It could be a sell, it could be a buy, it could be a different opportunity. But and again, Machine Exchange coin having a big increase in activity as well as addition inflow. So definitely one to check out there. DIA, Referum, Token Pocket, HI, Viberate, Wabi, Prosper, Division Network, Whale, Bitcoin, Unisocks, Polka Markets, Ethereum Push Notification Service, Edgeless Pickle Finance, DuckDAO, Dime, K21 Dig, and Genero Network. Is it generic? Is the Genero Network generic? We want to know. We want to know. All right, that's about all I got for the show, ladies and gentlemen. Thank you so much for coming. Before we conclude, I want to let you guys know that I've done a lot of work today on the website. Of course, we want to offer the greatest educational curriculum. Yeah, I do need to update the bottom banner to 3:30 p.m. I do need to update that. Thank you. We did used to do the shows always at 12 p.m. Thanks for pointing that out, Juice. It's my desire to offer the best trading curriculum for those who want to learn how to trade or improve their trading. So if you guys go to krakencryptocurrency.com and you check out our online trading academy, you can see we have added a ton of courses just over the last few days. And we don't have all the modules yet in here. So I've got a ton of modules to add to here, a ton of lessons. We're going to be updating this curriculum over the course of the next few weeks. It's going to be awesome. So we've added our advanced trading module here. We're going to cover advanced topics in options, decentralized exchange trading, futures and perpetual swaps, as well as maybe other advanced concepts that might come up in mentoring. Technical analysis, this is available to all our premium basics, and I'm honestly thinking that we might be opening this up to the public once we get it completely populated and do a few surveys from the members that go through it. But this is going to be your introduction to technical analysis, support and resistance, trend lines, channels, momentum oscillators, volume, volatility, average true range, the things of that nature. So just if you know very little about trading, or if you want a refresher, going through the technical analysis courses is, I think, the best. Advanced technical analysis, here we're going to really build on the skills that we learn in technical analysis and learn how to maybe adjust our oscillators, really read volume, open interest, cumulative volume delta, buy sell volume, market order flow. And the first module that is covering what we did in the mentoring session yesterday, doing a deep dive into open interest, is on there and live right now. We also, of course, have recently added our risk management course material, and of course, for new members, premium member onboarding, then our flagship course, Pathways to Profit. So all of this available at our online trading academy, as well as much more. So definitely don't sleep on that. And we will end today with a little bit more humor. And for this, I'm actually going to go to the big screen. And I am actually going to get rid of myself for just a second. As soon as I find myself. There it is. No. Transform. Reset transform. There we go. Okay, so this is a recent video that was posted about a trader on ByBit using an insane amount of leverage and going from over $100,000 in profit to well, you'll see. So we'll just start this. Oh, hold on, just a second. There's no audio. Properties, game. There we go. 쫄지 말라고. 쫄지 말라고.
놀라지 마. 말했잖아, 얘들아. 기다려. 안 팔 거야. 내 스타일 알지? 안 판다.
And smoked, ladies and gentlemen, and smoked. Absolutely smoked. So, yeah. What did we learn? Don't try to be one of the cool kids. Risk management, emotional discipline, consistent results. All right? Or you're just going to get posted on Instagram and people are going to make fun of you. All right. Thank you guys so much for joining me for another episode of the Breaking Bitcoin Market Update. As always, questions, comments, concerns, sarcastic remarks, death threats, and hot stock tips are gladly welcomed in the comments. And to that note, yesterday's comments. Two comments from yesterday's show. GBU Wally saying, nice family show, except for the blood in the sheets. 4 stars. And Mr. Ether Robert Warner, it's not often I miss a stream. Crying face emoji. Aaron Webb, I need to get in a better routine because I usually miss them. That's cool. They are always available for replay with timestamps, thanks to Crypto Bull. So thank you guys again so much for joining us. If you guys would like to stay up to date after the show, discord.krakencryptocurrency.com, link in the description. Go get your $50 free on ByBit and trade where we trade. And if you would like to improve your trading, premium.krakencryptocurrency.com. Links, as always, in the description. We will be back tomorrow with another Cracking Cryptocurrency episode. And until then, trade safely.